I'm Catherine Ross, and I'm here live from the NYSE with Jim Cramer. Jim, I want to kick off the show by talking about the markets, but first, I think we have to talk about the Revolt Ipo, which is happening right behind us.
No, tell me about that, because I don't know them very well.
So I'm going to sit down and interview them later on after they have their first trade. Right now, they look like it's going to trade around $23.50, which is above what I thought that they were expecting, around $19.
Well, tell me a little bit about how they make their money.
Instagram. It's really interesting. Their whole base is Millennial and Gen Z.
Oh, God. Buy.
They have over 3,500 influencers that do kind of their advertising for them.
Wow.
Right?
I mean, boy, does that ever play to the strength of what's going on? We own Facebook for action alerts, and it really gets results. It's hated, but people still use it. It's universally hated in the Valley. I always try to get people to say how they feel. But the fact is that Instagram is the best way to advertise in the world. And it is. I mean, and the best way to do it is pure, is that people say, I like something, and it works. I mean, Twitter not as good in advertising for me. Instagram is. And I salute them. I want to know more. You should go interview a lot of them.
I will. All right, so let's talk about this jobs number. It was a little bit disappointing. It came in short of expectations.
It's what we wanted. I mean, it's hard to... Ken Fisher, a good friend, was saying this is don't pay that much attention to the unemployment number, but that in general things are fine. And I think fine means buy. At the beginning of the week, I wrote a piece saying the market is way too oversold, buy. And I wrote a piece, it was about the oscillator hitting -5, and then -5 means you have to buy. Just find something to buy. We bought all week for action alerts. We sold yesterday some stuff because we bought so much that I didn't want to be in a position. We're doing next week a conference call. Our
next Wednesday on actionalertsplus.com.
Right, and the club call is going to be how to trim if you think the market's going to go lower. We did that, but then once the market got oversold, we knew you had to reverse direction, and we're going to just explain to people what to do when you think the market's going to go down. But once that oscillator got to -5, I have only once disagreed with buying, and that was in 2007-8.
And I know that we're going to talk more about the jobs report and more in depth on your thoughts about it over on our daily rundown on actionalertsplus.com. That's a video that will be taking place shortly after this one. Okay, so Jim, I want to move on because I want to talk to you about some of the earnings reports from last night. The one I want to start with is Beyond Meat because I covered it extensively. It was really interesting.
Yeah, well, Beyond Meat's very hard because I think a lot of money could end up being lost in Beyond Meat, but when this is what's supposed to happen, it's a textbook. They come public, they have a really great quarter. I mean, much better than expected revenues, a real path to profitability, going to win some very, very big contracts. That's exactly what's supposed to happen. And so it was textbook. And textbook means it goes higher now. They obviously priced that deal wrong. The conference call was all about how the world's changing in the way and that they're at the epicenter of it. A joyous conference call, orchestrated really, really well. No flies on the call. I just, at a certain point, other guys are going to come in. But what I thought was the most important line in the conference call was when they said our competitors have made a lot of mistakes. And that's Nestle, and that's Impossible.
They even called, without naming Impossible, they called out Impossible with the soy comment.
They did, and I just found that was Impossible's based on soy, which people don't, apparently, that's not, soy means not good tasting, soy means not good for you. The latter I don't really buy, but the former I understand. I think the Impossible Burger tastes great.
But you had the Beyond Burger?
Yeah, I've had everything. I think Impossible's just, I don't say by far, but really, really good. But I do think that when they talked about the mistakes, what they're basically saying is that they don't have the right ingredients and we do. Now, I think anyone who reads the full ingredients knows there's really a lot of chemicals. This is definitely not pure. By the way, I was out with someone last night from Starboard. I did not know that they have a big position in Papa John's. I didn't know that Papa John's was the most organic of all the pizza companies.
That's a shocker to me too. I had no idea.
And
I knew it wasn't Domino's.
Right, that's one of the reasons why I think I got to take a look at Papa John's. That may be a good stock to own. This was our corporate governance conference that we ran yesterday. But I think that one of the reasons why I do worry about Beyond Meat is I look at the label, and the label is filled with lots of stuff that millennials typically don't want, and Gen Zs typically don't want. So, I mean, at a certain point, it's going to run out. But right now, it's fresh, it's hot, it's rolling.
Well, and one thing that I was really intrigued by on the conference call was Ethan Brown, the CEO's comments about Beyond Burger 2.0 and how they're going to roll that out.
Wasn't that something?
It was something. I'm wondering if that'll have less chemicals, maybe. I don't know.
I hope so, but I mean, to me, 2.0 sounds like something that McDonald's is going to take. I mean, they did kind of make references to some big buyers out there beyond Carl's Jr. When a stock's up 25, you usually just think it's a fraud. I mean, it's crazy, just a short squeeze. But then you read that call, and they're very savvy, and they hit every single base you need to hit to get a stock to go up. They were very seasoned. It was very good, and I would not get in front of that juggernaut right now. I mean, if you're a short seller, I say let it keep going for now. It was too good a conference call.
So let's take this from an investing education angle, because we've had a lot of earnings reports this week that have soared. We had Zoom that soared, we had Stitch Fix that soared, we had Beyond Meat that soared. So when a stock goes over 20% after an earnings report, what should investors do?
Well, I think that you should take some off the table if you own it, and play with the rest. Don't take it all off. But you have to, because one of my tenets is that stocks that go up too fast, now there's no speed limit how fast you go up, but on the same news over and over, which was the quarter is going to be good, the quarter's going to be good, you should take something off, because it just should not go up endlessly. Quarter's going to be good, quarter's going to be good, quarter's going to be good. Quarter comes out, quarter's good, stock goes up. Monday would be a great day to sell some Beyond Meat.
So
but not short, because these are things that have to do with the mechanics of the stock market. Too many people are shorted. That's why it can have those runs. So, I mean, that's a silly thing to be short that stock.
let's talk about Zoom, which I just mentioned. That's our real money stock of the day. They reported earnings.
They had a good quarter. They work well with other companies.
They're one of the profitable IPOs, which is saying something in this environment.
They a bunch of guys left from Cisco. They have a good product. When I was at NVIDIA, their products everywhere. What I thought was interesting there was a land and expand, that they're in every room. They're not just in one room. I thought this was very bullish. I thought that call was great. One day, I think that Cisco will challenge them in a way that could hurt their profit margins, but that was a very strong call too. Again, what you want in the IPO market is you want a company to come in really hot and then deliver the numbers. The unicorns, the rap against the unicorns were the case of Lyft and Uber. They had peaked. They're like coming like this. But you get a Zoom and it's going like this. You want a piece of that. Same thing with, I know that the revenues are very small for Beyond Meat, but the market cap's not that big. And if they get a big contract like a McDonald's, I mean, look out.
What was the one takeaway that you had from Zoom's report?
From Zoom, we're still pretty early on face and having meetings where we're doing something that would have been in the show 24. I think that we're early. That they have a lot more orders that can come. I think Zoom's good stock. Now, until Cisco comes in hard, I have to tell you, I think that Zoom goes higher.
Now, as I've mentioned, well-run company. Now, as I've mentioned, Zoom is our real money stock of the day. So, of course, you can go over to realmoney.com and you can find coverage from Kevin Curran and our other wonderful contributors. Now, Jim, that's all the time that we have for today.
Everyone, again, don't short these red hot stocks. I mean, that's not why stocks go down, is valuation. Don't do that, okay?
That's excellent advice. All right, thank you for joining us, Jim. That's all the time that we have for today. For all of you watching on TheStreet.com or on Facebook, we are now jumping over to our Action Alerts Plus members-only club video on ActionAlertsPlus.com. Thanks for joining us. I'm Catherine Ross, and we'll see you on Monday.